Good morning. You're watching a remote broadcast of Business World Live. I'm Jes Delos Santos. It's 10:34 a.m. this Monday in Manila. We are over an hour into the first trading day of the week. Let's go straight to our top story. Now, there is no sign that the $2.1 billion missing from German payments firm Wirecard entered the country's financial systems. That's according to Bangko Sentral Governor Ben Jokno himself. In fact, Jokno said the perpetrators are just using the names of BDO and BPI to cover their tracks. Both BDO and BPI earlier clarified that Wirecard was not their client, nor did they conduct any transaction with a German firm. Jokno says BPI and BDO have not suffered any losses, but the Bangko Sentral has begun investigating the matter nonetheless. BPI and BDO had also informed Ernst & Young, the external auditor of Wirecard, that bank documents attesting to the missing funds were, quote, spurious. BPI told Reuters that it had suspended an assistant manager whose signature appeared on one of its marketing of let me clarify that. BPI told Reuters that it had suspended an assistant manager whose signature appeared on one of the fraudulent documents. Meanwhile, BDO told BSP that it appeared one of its marketing officers had fabricated a bank certificate. The BSP also said the Wirecard issue was different from the $81 million cyber heist a few years ago, where stolen funds from the Bank of Bangladesh entered a local bank before the money were laundered into casinos. RCBC Chief Economist Mike Ricafort says the BSP statement will be a reassurance to Philippine banks and investors. But for Dean Manuel Lopez of the Letran Graduate School of Business, a, quote, cloud of doubt lingers, saying the integrity of the financial system has once again been put to test. All right, following that story, let's have a check of how as to how the two banks in question are faring, at least at the start of Monday trade. As you can see here, things not looking so well here for two of the country's biggest lenders here, BPI and BDO. BDO, for one, looking at the entire financial index here, the biggest losers so far, they are down 1 2/10%. BPI, on the other hand, is also down by 0.3%. Just this morning, you have both lenders reiterating that Wirecard is not a client, and a document scared by Ernst & Young, Wirecard's auditor, suggesting that Wirecard is a depositor, have in fact been falsified, at least according to BDO and BPI. And like what we mentioned in the report earlier, employees in question have already been suspended. BDO pretty much saying the same here. Looking as well at how the entire sector at least is performing, the financial index here, at least for this day alone, as you can see here, BPI, Union Bank rather, is gaining the biggest here. It is up 14%. Now, we're taking a look at the financial index here, primarily because you have Debt Watcher S&P saying that they are seeing a weakness, the weakness in loan growth persisting for our lenders here. They're forecasting it to be in the low single digits, still due to the health crisis here. This is they expect households to hold back on purchasing houses and cars and other major purchases until the risks are tempered. Recall that Jokno did say last week as well that they have yet to know the real behavior of consumers. S&P, on the other hand, is saying, credit costs will remain elevated for 2020, but will decline afterwards. Add to that, of course, the BSP's easing stance, which, according to them, will in turn support credit growth. Now, speaking of which, you have the capital economics seeing the BSP keeping rates steady as they meet this week. That is on Thursday, June 25. And it's despite them seeing the economy in need of further support. Capital economics, in fact, is anticipating cuts by as much as 75 basis points in the next few months, but that, at least according to them, might not happen this Thursday. According to them, much support needed, really, given the dreadful growth outlook, one of the worst in the region. In fact, there are major slumps in industrial production and labor data that they have taken note of here in the Philippines. Now, however, as mobility is restored, according to them, it will still take time before full recovery is achieved. Much hanging on our recovery story. In fact, you have credit raters, for one, on the lookout as to how things are going to fare for the Philippines. Moody's Investor Service is saying, That's going to be a key determinant in their sovereign ratings. Recall that they did maintain a stable outlook in May, affirming a Baa2 rating here for the country. They also see GDP contracting by 2% before recovering to 6.4% in 2021. Fitch ratings, on the other hand, recall as well, they did maintain a stable outlook. They did downgrade, however, the Philippines to a stable outlook from positive back in May, but affirmed its triple B rating. The stable outlook for the Philippines, of course, assumes a drop in fiscal deficit for 2020 onwards. However, they are seeing the economy contracting by 4% this year against the BSP meeting on June 25. Well, that's 3 days away. Of course, a lot of investors latching onto what's going to be the BSP's next move here. However, let's see how the local bourse is performing, at least at the start of the trading day. Again, we are over an hour into the trading day. As you can see here, the index continuing its losing ways here from last week. It is now down close to 0.5% to 6,286.34. Recall, of course, that Friday, you have the benchmark index dipping by 0.5% to 6,315 on a weekly basis. You have the local bourse slumping by 2.5%, putting a halt to its 3-week ascent. Lots of things driving that slump in the local index last week. For one, you have second wave worries over COVID-19 in other countries here, especially with a number of economies already reopening. At the same time, you have the Fed's bond buying program also proving to be a catalyst in last week's movement. There's also tension in the Himalayan border. That's between Indian and Chinese forces, as well as the rebalancing of the Financial Times Stock Exchange. Locally, there's the ADB reversing its projection, now estimating a 3.8% contraction for the economy. You also have the BSP forecasting a 5% drop in remittances. So let's see what's going to drive shares this week. Again, you have the index starting the day in the red to 6,279. It is now down close to 0.6%. PNB's Manny Lisbona is expecting shares to consolidate still at current levels with 6,130 as the first line of support. However, Aniseta Pangan of Diversified Securities is saying pretty much the same thing, consolidation, but with a downward bias as fears linger over a slowdown in economic activities as the virus continues to spread in the Philippines. For one, there are concerns that we might revert to strict quarantine measures like what happened to Cebu City, especially now that you have 30,000 cases. RCBC's Michael Ricafort, on the other hand, pretty much also saying, by the way, pretty much echoing what Aniseta Pangan is saying. He is seeing support level at the 6,000 to 6,200 level. He says, though, that while we tumbled last week, it's still within our 3-month highs, considering that there was a wide sell-off across global markets. Now, here are other stories we're watching. Economists from the University of Asia and the Pacific identified key industries that should be prioritized in the reopening of the economy. These include food manufacturers, accommodation and food services, public administration, and construction. In an unpublished paper, the economists recognized that all sectors have been hurt by the pandemic, but not all to the same degree. So they are proposing the use of output multipliers to gauge what industries have relatively more economic impact and should thus be a priority in terms of reopening or possible assistance. The UANP economists say these multipliers should be adjusted for demand and employment impact. This is seen as the best way to support the country's recovery from projected losses. After all, the Deutsche Bank is expecting the economy to contract by a sharp 10% in the second quarter, precisely due to the business shutdowns when the zone was placed under ECQ. The Philippine Star cites Michael Spencer, head of research for Asia Pacific at Deutsche Bank, saying the forthcoming contraction is likely deeper than anything experienced during the Asian and global financial crisis. He said it could even be worse than the 1987 recession. Spencer added that it will likely take 3 or 4 months for consumption to normalize, but still not to pre-COVID levels of economic activity. To support this recovery, Spencer said it is crucial for the government to get the build infrastructure spending on track. Now, the government borrowing rose to almost 674% in April as it continues to boost our pandemic war chest. Domestic borrowing accounted for almost 67% of the total, while about 86 billion pesos came from foreign sources. The increase is mostly due to the 88 billion peso worth of T-bills issued that month, which was significantly higher than the 15 billion pesos issued in the same period last year. Meanwhile, program loans, which presented borrowings from multilateral lenders, hit 90 billion pesos. The Energy and Foreign Affairs departments are seeking ways to resume exploration in the West Philippine Sea as pandemic restrictions ease. The two agencies are citing the need to assert sovereignty in disputed waters. Oil and gas exploration in the disputed waters was halted because of restrictions adopted to contain the coronavirus. Investor interest also suffered because of the collapse in global oil prices, which dried up demand amid the pandemic. Meanwhile, China is still pursuing expansion plans into the South China Sea. Energy Secretary Alfonso Cusi said the government will resume its joint energy exploration work with China and the territorial waters in order to attain energy security for the Philippines. Cusi claimed that the government can do this without compromising the country's sovereignty. Most sectors are now riding that wave of the new normal, and even the legal profession is not exempt. The pandemic has lawyers and clients accessing legal services via mobile app Lexmeet. To talk about that, we have Marlon Valderama, president and founder of Lexmeet Incorporated. Good morning, Marlon. Great to have you here with us on the show.
Hi, good morning, Jester, and
All right, so
thank you
let's
for having me
kick
here.
things off. Lexmeet has been around even prior to the pandemic. Tell us more about the birth of Lexmeet. What was the pain point that you were trying to address with the app?
Well, based on my experience as a practicing lawyer, I've encountered this problem with access to legal service for our OFWs. So usually, our overseas Filipino workers cannot solve their legal problems here in the Philippines because they are abroad, and they are having problems contacting lawyers and accessing legal services. So I think of this as some sort of a trailblazing project for my law office. It started with my first website, elawyersonline.com. Then later on, I think of sharing it with my fellow lawyers. That's where Lexmeet was born. So I shared it with my other lawyer friends who are also practicing in private, and I was able to put up this mobile app, so it would be more convenient for them. Even if they are outside of their law office, they could give service to clients.
So, the initial pain point that you were at least trying to answer was that of OFWs. But how has it transitioned since then?
It transitions since then when there are also many small medium enterprise who are also looking for affordable legal services, and they, since they are businessmen, they could not get out of their activities. So it is very convenient for a small medium enterprise to just book an appointment with a lawyer in a mobile app. So
Mhm.
that's another pain point that I solved using the platform of Lexmeet, as well as, of course, now with COVID, we are now addressing the pain points of getting legal services without leaving the comforts of your home.
Mhm. Now, how exactly do you make legal services affordable here? What are the price points that you have, and how do you make it a less intimidating experience? Exactly especially for the common folk. I mean, technology in itself can be intimidating.
Yes, that's really the one of the pain points of accessing legal service. They thought that legal service is expensive, but in Lexmeet we are making it an unbundled service. For example, the traditional access to legal service would normally you would spend 2,000 pesos for speaking with a lawyer for 1 hour. But here in Lexmeet, if you only have 500 pesos and you already have the answer for at least 12 minutes, then yeah, you spend a lot of you save a lot of money, because number one, you need no longer to go to the law office. You don't have to travel. You don't have to pay for parking, pay for the transportation, and of course, it is unbundled, meaning it's consumption based. So if you only consume 15 minutes, then you only pay 500 pesos for that. It's not a fixed amount of consultation fee.
So, how, in a way, do you address also concerns, especially for those who are less confident to actually seek legal services without the face to face or physical interaction? Because, I mean, I would assume that there would still be clients who would rather prefer that they actually talk to a lawyer face to face.
Yes, we're able to solve that because uh, we are matching the lawyer, no, with the client. So it's the client who chooses the lawyer based on the lawyer's list that we gave them. And before meeting them face to face, before a client would face the lawyer face to face, they are acclimatized, some sort of being acclimatized by studying their lawyer's profile, their language, their dialect, as well as their specialization, so that when they meet face to face, the client would be at least familiar with the background of the lawyer. In fact, they could be matched using the matching algorithm of Lexmeet with respect to their language, so that if a client is some sort of uncomfortable talking with English, he could choose a lawyer or select a lawyer talking in his or her own dialect. So that's one of the solution of Lexmeet when it comes to getting the client comfortable with talking to a lawyer.
So the app does not exactly do away with the physical meetings. There are cases in which you actually do a hybrid session, or at least a hybrid addressing the client's needs.
Yes, we cannot do away with the physical meeting with a lawyer because there are some things that you have to talk really person to person when it comes to legal problem. But this is an initial legal consultation wherein the client would be at least comfortable discussing it initially with the lawyer, so that once they have some sort of agreement or some sort of understanding what the legal problem is, then they could go to the next phase of lawyering, which is the physical meeting, and as well as taking care of the legal issues or legal problem of the client.
Okay. One of the bigger concerns when we're talking about the legal system here in the Philippines, at least, is the slow progress in cases. So, how does Lexmeet answer that, or at least help solve that problem?
Well, first of all, no, it's really slow to finish one case here in the Philippines. But of course, the Supreme Court is doing its best to fast track the process with some sort of rules of court amendments. But Lexmeet is helping them because we are providing them the opportunity to have preventive lawyering. We want to prevent litigation so that for example, a businessman who would like to who need legal advice for a major decision in the business, he would first get legal advice from a lawyer using Lexmeet. It would really save him uh, when it comes to litigation expenses if he would be able to prevent a case from happening. That is where Lexmeet is coming from. We are giving the SMEs, the OFWs, to prevent litigation by giving them legal advice before it happened, something like that.
Okay. Now, from the lawyer's perspective, at least those on our platform, all legal professionals that you have are they associated with any firms, or are they committed to the tool? At the same time, do what specializations do they cover?
Yeah. All of the lawyers in Lexmeet are independent lawyers. They are usually solo practitioners or connected with a law firm. And of course, they have various specialization. And that's why Lexmeet is matching the client's legal problem with their specialization. We have this unique algorithm wherein we match the client's legal problem with the lawyer's specialization, so that when the client select a lawyer, we give them the right lawyer for their legal problem.
Okay, then that would also does that also mean that compensation, just the same, is still competitive, even if the lawyer is independent or a solo practitioner via the app?
Yes, and I think the lawyer likes it because even if they are in their house, they could earn using Lexmeet.
Question now is, how have things changed since the health crisis? Was there an uptick in app use both from the lawyer and the clients? And at the same time, what are the most common cases brought on the app?
So before the pre-COVID era, uh, the we have a normal transactions. But after the COVID, now the usual cases are usually the defaults asking for about rehabilitation, closure of business, retrenchment, and of course the usual other um, problems of SMEs when it comes to financial matters. So that's really now the problem of our SMEs, no. So because of COVID, our demand also increases. So we are now some sort of it tripled, the demand tripled.
Mhm. Now, given that as well, what's your outlook now for the year? How many clients do you have at the moment, and how many lawyers as well? And where do you see this moving forward?
Well, as of now, we have 32,000 clients, 32,000 clients, and 570 lawyers. And moving forward, probably by 2020, we would be able to have 1,000 lawyers nationwide who would service probably 50 to 70,000 clients. So mostly they are SMEs and those having problems with their financial problems because of COVID.
Okay, definitely great things ahead there for Lexmeet. Let's see things how things are going to fare for your mobile application. Thank you so much for your time this morning, Marlon Valderama, President and Founder of Lexmeet Incorporated. Thank you, sir.
Thank you, Jesse.
All right, so let's have a quick check of how things are faring in the market. To be exact, here, the financial index. That's after, of course, you have BDO and BPI once again reiterating that Wirecard is not a depositor in their banks. Considering as well, that the documents presented were in fact falsified. Looking at how they are performing, however, things still not looking good here for both lenders. BDO, as you can see here, is now slumping, edging lower by 1.5%. On the other hand, you have BPI as well in the negative territory here. They are down 0.7%. But there's one bit of different news here for BPI here. Let's see how this will change sentiment for the stock here. The lender is launching its first COVID response bonds. That's their COVID action response bond, or the CARE bonds. That is going to be due on 2022 with tenor at 1.75 years and interest rate at 3.05%. They're setting the minimum at 1 million pesos with additional increments of 100,000 pesos. This is a first peso denominated bond to be issued to directly address the pandemic. It's going to be the third tranche of BPI's 100 billion peso bond program. The goal for BPI is for them to raise 3 billion pesos from this offering. It's going to run from June 22 to July 17, with issue and listing date on August 7th. It will fund and refinance eligible MSMEs under its sustainable funding framework. But just the same, again, like what we mentioned earlier, you have BPI starting the day in the red, down close to 0.7%. Now, from one lender, let's move on to one property player here. That's Golden Bria. They reported a 2019 net income of 2.6 billion pesos, with revenues climbing 49% to 8.6 billion pesos. Now, that uptick, at least in 2019, was driven by real estate sales surging by 50%. Add to that, they are targeting to open 3 new projects with Bria Homes also expanding its real estate portfolio with new horizontal and vertical residential concepts. But just the same, you have HBN here, not moving by much here. They are still priced at 300 pesos a piece. Now, from there, let's have a wider look here at our local bourse. You'd see here the index still at least in the red here Monday morning. They are down close to 0.5% at 6,286.16, pretty much really extending those losses that we saw last Friday. Again, the index dipping by 0.5% at least on a Friday, pretty much putting a halt to the 3-week ascent that we saw, at least the index recovering the past few weeks here. But one index that we have to be keeping at least sectored, we have to be keeping an eye on our oil players. You have Philippine oil stocks climbing as the DOE pushes at least for the continuation of a joint exploration with China. In fact, looking at the performance of our stocks here, you'd see PXP Energy really leading the pack here. You have the stock here gaining as much as 9.4% at the start of the trading day. Apex Mining likewise also gaining big here. They are edging higher, 3.9%. Really, they are pacing the gains here among Philippine offshore oil and gas drillers here. As the DOE says, they are once again pushing for that joint exploration with China for resources in the disputed South China Sea. Again, you have at least a mining and oil index bucking that sell-off that we're seeing in local shares here. The index is up 1.4%. And that's the first look into the business day this Monday, June 22nd, 2020. Catch us again tomorrow at 10:30 a.m. I'm Jes Delos Santos. We are One News.